Hey everyone, and welcome back to the channel. If you've been watching the fintech space lately, you've seen one stock absolutely lighting up the scoreboard, SoFi Technologies. And after their third quarter earnings report for 2025, it's not hard to see why. This wasn't just a beat, it was a record-shattering, guidance-raising, drop-the-mic kind of quarter that has both investors and analysts buzzing. So, let's break down the numbers, see what the CEO is saying, and answer the big question, is SoFi's growth story stronger than ever? SoFi Technologies, ticker SOFI, is a leading all-in-one digital financial services platform whose core mission is to help its members achieve financial independence. Initially founded in 2011 as Social Finance, Inc., with a focus on student loan refinancing, the company has dramatically expanded its ecosystem to offer a comprehensive suite of products, including personal and mortgage loans, credit cards, investment accounts, automated investing, and insurance, all accessible through its user-friendly mobile app and website. A key differentiator is its SoFi Money cash management account, which integrates banking services like checking and savings with competitive interest rates. Furthermore, SoFi enhances its value proposition by providing complimentary financial planning tools and career coaching, creating a holistic financial ecosystem designed to attract and retain members seeking to borrow, save, spend, invest, and protect their money all in one place. Let's start with the headline numbers that sent the stock soaring. Adjusted net revenue hit a record $950 million. That's a massive 38% increase compared to this time last year. The growth engine is not just running, it's accelerating. And that revenue is finally, convincingly flowing to the bottom line. The company reported a net income of $139 million. This isn't just a story of potential anymore, it's a story of proven profitability. But where is that growth coming from? The answer is simple: an absolute explosion in their customer base. SoFi added a jaw-dropping 905,000 new members in just 3 months. Even more impressive, they added 1.4 million new products. This shows that existing members are deepening their relationship with SoFi, using more than just one service. This brings their total member growth forecast for the full year to at least 3.5 million, up from a previous forecast of 3 million. The flywheel is spinning faster than anyone predicted. Now let's look under the hood at their core lending business, because the strength here is remarkable. Student loan originations saw a huge 58% jump to $1.5 billion. And home loan originations nearly doubled from a year ago, setting a new record at $945 million. But here's the real kicker that shows the quality of this growth. SoFi reported its lowest personal loan net charge-offs in over 2 years. In a time when other lenders are worrying about credit, SoFi's book is getting healthier. That is an incredibly bullish signal. Now, all of this fantastic performance in the past has led management to become incredibly bullish about the future. They didn't just nudge their guidance, they significantly raised it. For the full year 2025, they now expect adjusted net revenue of about $3.54 billion, up from their previous forecast of $3.375 billion. And for adjusted earnings per share, they're now guiding for approximately 37 cents, a huge jump from the 31 cents they previously expected. When a company raises its profit guidance by nearly 20% after a strong quarter, it tells you they don't see this as a one-off event. They see it as a new normal. So what's next? On the earnings call, CEO Anthony Noto made it clear they're not taking their foot off the gas. He emphasized aggressive investment and accelerated innovation in key future tech areas like crypto, blockchain, and artificial intelligence. They're building the financial services supermarket of the future, and they're doing it at a breakneck pace. So, what's driving this success? Demographic dominance. SoFi is becoming the bank of choice for young, high-earning professionals. This isn't just a customer base, it's a long-term growth engine. Innovation pipeline. They're strategically investing in the future, in crypto, blockchain, and AI. They're not just a lender, they're building a next-generation financial ecosystem.
Strong credit quality. Even while lending aggressively, they're reporting their lowest personal loan charge-offs in over 2 years. This shows disciplined risk management, a critical factor for any financial stock. Now, let's pivot to the risks, because no investment is without them, and ignoring these could be costly. Intense competition. SoFi isn't just fighting traditional banks. It's up against a swarm of other fintechs, all fighting for the same customers. Economic sensitivity. As a lender, SoFi is exposed to economic cycles. If unemployment rises or interest rates shift unexpectedly, their profitable lending business could take a direct hit. Regulatory hurdles. Operating at the intersection of finance and tech means navigating a complex web of regulations that could change at any moment. The valuation question. Perhaps the biggest debate right now. The stock has had a massive run-up. Is the current price already reflecting all this future growth, making it vulnerable to a sharp pullback? Execution risk. Can they successfully scale all these new tech initiatives? Maintaining this hypergrowth momentum is incredibly difficult. SoFi Technologies presents a classic high-growth, high-potential opportunity, balanced by significant risks. The recent results are undeniably strong, and their vision is ambitious. They are executing well and capturing a key market segment. However, investors must be comfortable with volatility, competition, and the inherent risks of a company trading at a growth premium. The overall analyst sentiment on SoFi is best described as cautiously optimistic, with a hold rating. So what does that mean in numbers? Looking at the most recent data from over 20 analysts, we have a handful of bulls, 1 strong buy and 6 buy ratings, but the majority are on the sidelines. 12 analysts have a hold rating, and there are a few bears. 3 analysts have issued a sell rating. So the clear takeaway is that while the story is compelling, most professionals believe the current stock price around $30 fairly reflects the company's value, and they're waiting for more evidence before getting more bullish.
Now this is where it gets really interesting. The average consensus price target for SoFi sits between $21 and $21.30. Let that sink in for a second. With the stock trading near $30, this implies analysts, on average, see a potential 25 to 30% downside from current levels. This is a crucial point. It suggests that after SoFi's recent strong run-up, the professional community sees limited near-term upside and believes the stock may have gotten ahead of itself. But wait, it's not that simple. The story behind these numbers is what really matters. First, the bull case. Analysts at firms like Mizuho and Truist Securities are in the outperform or buy camp. They've issued price targets as high as $31. Why? They're impressed by SoFi's blistering growth. The recent Q3 2025 earnings were a blockbuster. The company smashed estimates, reported record revenue, and most importantly, raised its full-year guidance. For them, the strong member growth and path to profitability justify a higher valuation. Now, the bear case. On the other side, analysts from firms like Keefe, Bruyette, and Woods are much more cautious with underperform or hold ratings and price targets down near $17 to $18. Their concerns? Primarily valuation and competition. They argue that even with great growth, the current stock price is too rich. They're also wary of the intense competition in the fintech space and the risks of SoFi needing to perfectly execute its complex business model. So you have one side focused on the incredible operational momentum and the other focused on the price you're paying for that momentum. The consensus view is a hold. This isn't a sell everything signal, but rather a recommendation to be patient. It suggests that for new money, there might not be a huge rush to buy at these levels, and that there could be a better entry point in the future. For current holders, it often means sitting tight and letting the growth story play out. What do you think? Are you buying, holding, or selling SoFi? Let me know in the comments below, and don't forget to like and subscribe for more straight-talking stock analysis. Thanks for watching.